Well, hello everyone. Today is Tuesday, April 29th, and this is our first live stream that we've taken to YouTube and X. So bear with me today as some of this technology is a little bit new and maybe a little bit clunky for me because I'm an old guy, but bear with me as I kind of wander through this with you guys today. It's a little different setup, so many of you are used to joining through Telegram on the FEG token Telegram site, and today of course we're asking you to watch on X or on the FEG token YouTube or on the Blunhouse technical analysis YouTube. They're all going to be there for you to watch whenever you need them. We are trying to bring on our guest Ben June today, and hopefully he can connect through this newfangled technology. If you're there, Ben, you can talk and hopefully we can hear you. If not, we'll keep working on it. You have to bear with us. This is a live stream, so you might hear a dog bark, you might hear a car go by, or the wind noise from outside, but we're going to make the best of this, and please feel free to use the chat function that is on the YouTube site. You should be able to come through. I should be able to see your questions or the symbols that you want me to look at. All right, so what we're going to do, we're going to try and kick this off today, and again, feel free to reach out. Make sure you've got your questions ready and your curiosity. So what we are going to do now is we are going to start looking at some charts, and let's start with Bitcoin, which is what we usually do. And for those that don't know or are unfamiliar with how Blunhouse people look at a chart, we believe a few things, or I believe a few things. And that one is current price revisits past. So we're always looking, in the event of an uptrend and a downtrend, we're looking for past price. In order to figure out where price is going on the right side of the chart, we need to look at the left. Right? When it comes to support and resistance, first attempts often fail. The probability of those failures are very high. Right? And then we use volume gaps. That's the volume profile that you can use on TradingView, and it looks like what you see here on the right hand side. The one I think I use is KV or KC for coins or something like that if you're looking for it in the indicator section. But what it does is it gives you this profile on the side of your chart. This blue area is the more dense trading, this gray area is the lighter trading, and then this POC is the red line in the middle, and that stands for point of control. Up top we have the upper value range and then the lower value range. Things basically price that trades above the upper value range, think of it as a premium. Okay, so what we've been kind of talking about is what Bitcoin is looking for on this chart, on the daily chart. And we've been talking about the point of control. It will act as a draw for price, regardless of the time frame you're on. It's going to act as a draw for price. We are still in a bullish trend. What you're seeing on this chart obviously is the volume profile, and then this Blunhouse TA script that I run pretty much on all my time frames. And when price is trading above these two levels, then you're in a bull trend. Right? And price goes higher. When you're trading below those levels, on the south side of those lines, you are in a bear trend. So as long as price is riding up those levels, then we kind of have every reason to stay in the trade. We're not seeing any sell signals or anything like that on the daily. But we know that price likes levels, right? It looks for past price. So what could it be looking for on the chart? So those are the three major moving averages that I'll use. That's the 20, the 50, and the 200. So right now, you had a nice breakout that came off some major moving averages, and that's typically a bullish sign. What's also bullish is when price breaks through those averages to get on the north side, and what was once support or resistance actually now becomes support. And you can see that price, we talked about this before, in order to determine where this was really going, we had to break through the 200-day moving average, which we did. So we have some bullish sentiment, and I still think that price is probably looking for that point of control range. Right? Here's this big volume gap, and we know what happens when price can get into the gap. It can shoot up really quick. So that's why I use these, right? So if we wanted to go long here, we know there's a gap because that's what these lines are telling us. Price can shoot up through there real quick. What it does once it gets up here, if it tags it at all, but it likes it. You can see the past price shows you that it likes it. So I would think that it'll want to tag that again, and that's what's created this shelf. And when price retraces, where do you think it's going to retrace to? Probably next major moving average as support, or a bench of past price through here, kind of catch a little bit of these tops, but it ends up somewhere in this neighborhood. And there's kind of three things that I'm trading off of. It's filters, filter out the noise. Fractals use many time frames, so you don't get hit by something you didn't see coming. And then Fibonacci's, right? The filters are kind of what this does for me. It filters out the stuff that you need to know from what you don't need to know. And what I need to know is, am I still in an uptrend? And the answer is yeah. But if we put fibs on this chart, fib levels, what might we see? Because that'll help us. I'm not being overly forensic about where I'm placing these levels, but it will tell us where we might see price pull back to in the event of a retracement. And that number we look for, as you can see it in here, is always 618. It's kind of the home base. And 618, although you can't see it because it's hidden behind these candles, and we can fix that, it's right in here. So in other words, if price is to retrace to a 618 level, it would bring you to the bottom of that volume shelf. So here's the gap, there's the bottom of the shelf, there's 618. You can see the kind of a benching of past price. That's what we look for. However, until the chart tells us that it's no longer bullish, we have to respect the price on the chart. And the price on the chart is still bullish. I do believe if we're going to get up here, and when we do, we'll see what happens. Maybe that's when we start that retrace and price pulls back. But what we do know is that if it's not 618, it'll be this level, or this level, and all of it within that gap. And that's where it kind of gets tricky. So Ben is telling me that he can see things, but he can't talk. So I don't know what that means. It says he's unhidden, so it should be okay if he can see that. Again, this is the reality with live anything, right? So that's where we're at. Let's check the weekly quickly on Bitcoin just to see where we might be. All right. So we got a nice bounce. We talk about support and resistance, and you guys know how much I respect the 50-day moving average. Here's some nice support way back in 23, which seems like a lifetime ago. You get it again here in September of 24, and again here the beginning of April of this month, the first week. We cut a nice bounce off the 50, and price was exuberant enough to break the 20-day moving average. That would have been your target, right? Break one level, find the next. And when these things bounce, they're going to bounce from one level to the next level. So that 20-day level would have been a target. But what we're learning is there's still a little bit of gas in the tank. And what might price want? Price might want what's up here. Because in the event of an uptrend, ultimately you're trying to take out the previous wave's high. If this would roll over, we'd be looking to take out the previous wave's low, but right now we're looking to take out the previous wave's high. What you have to respect, however, is all of this gray and these volume gaps, because this gray indicates light trading already. So you fall into these areas and you could fall quite quick. Right? So that's looking forward, and when we bring up some of our other indicators, and what we're using here is a stochastic RSI, right out of the box, no adjustments, a Fisher transform, same thing, and a MACD, no changes. For those that have never used the Fisher, it's one of those noise filtering tools that I use, and it creates a Gaussian channel that filters out nonsense, and that's why you have these nice, smooth moves like that. And when they're, that is bullish, that's bearish. I don't mess with the Fisher at all. It's a very good indication of trend. And this is telling us that, hey, look, these levels are diverged, and they just seem to want to kick up. So maybe there is a little bit of gas left in the tank here. So let's see how close we can get to these all-time highs. And if we don't get them, we may retrace a little bit and come in again, take another run at it. You don't always take them out at the first attempt, right? Which we know. And here's 4-hour Bitcoin. So we look forward and we look backward. And remember, everything is fractal. What happens on one time frame, you'll see on another. Any asset, any time frame, any market. Right? So what we want to be cautious of on this chart is what? That big gap on the right. Right? That's the risk on the chart. And we want to try and make sure that we're always aware of the risk on the chart. Like for me, I became a more effective trader and technician when I began to look for the risk first and the home run second. So although, we were given a buy signal on the 4-hour, which is still in play, and you can see price is just riding up this level. The divergence between these two levels is still there, telling you that the bullishness is still there. But the risk on the chart is the failure up here. This gray trading is light already with this big volume gap, which means that if you hit into it, price could sink quickly. And we know that when we break one level, we find the next. So if you break the 20, you're going to look for the 50. You break the 50, you're going to look for the 200. Make sense? And what do we know? This is the upper value range. The upper value range is telling us that all this stuff, this is a premium. Lower value range, that's a discount. And obviously this is the happy middle. So that's the risk on the 4-hour. If you fail this level, you kind of risk having to come back and test the 50. And if you don't bounce, then you're going to fall to the next level. Would this be the first test of the 50 since the breakout? Yes. So we'd be more inclined to believe that you might bounce when you test it, because those first attempts typically get supported. If price breaks through it with velocity, then that's a whole other message, right? Okay. So we're going to move along here. Now, if you have any questions, please drop them in the chat for me, and I can actually see the chat without too much problem. So please just drop them in if you want me to look at a symbol or whatever. Drop it in there. This is one of the changes that we make from having the whole group in Telegram. So let's look at a couple other things here. I wanted to look at FEG for a moment. Find the right feed. So it doesn't matter what we trade, right? All of the stuff that we see, the phenomenon is the same, right? We're looking for breakouts out of consolidation. We're looking to get north of major moving averages to start to peck away at that past price, because that's what the draw is going to be. So if we look at this chart, and we know how all this big downhill stuff happened, but if we look at this chart down here, quite simply, had a nice move up, you get a clean signal right off the 20, or a little bit before the 20. You get supported all through that from the 20, break through the 50, and you can see that the divergence between the T line and the other level is still there, so you know you're still in an uptrend. 4-candle retracement. Where do you find support? Right at the T line. And this is important because you want to make sure that you continue to stay above the T line. You want to make sure you close above the T line. Now, if this was to bounce in here, what do you think we would look for? The previous wave's high. Each and every time. And because it's a process, right? It's nothing goes straight up or straight down. You know, you'll work at this high, and then when you break that level, you'll probably have a retracement, and then you try again, and then what do? You try and break through this level, and so on, and so on, and so on. Any asset, any time frame. That's kind of how we do it. I really do think Bitcoin wants that point of control. That's why I keep checking on it. Let's look at the major markets for a second, right? Because there is so much going on here. This is the Dow Jones, and just going to take the volume profile off and our signals off for a moment. If we were to look at this is when the daily, see how busy the daily looks through all of this in here. These big red candles, big green candles, but through all of this drama, you know, it took a week or so to even break through the 20. And now you have to peck away at this level up here. So current price revisits past. It's going to look for this level, right? It's going to look for in here, the bottom of this candle, the tops of these candles, and we'll probably find the 50 somewhere in that process. And when it does, that'll be a real critical test for the market. You can see this is the S&P. I think it's going to want to challenge this level, which again is the 50. And when it does, that's when we get the big test again. And first tests typically fail. If it breaks through, it's telling us that there's a little bit more gas in the tank. This is a 10-year treasury. Let's take a weekly chart, because that's where we really get to see the trends, right? So if anyone's buying a house, you know, you're going to want cheap interest rates. That's what everybody wants, right? You're going to borrow money, you want to pay as little as you possibly can for it. And you know what we're seeing is the 10-year kind of tested that 5% level, and then kind of faded away, right? And has chattered around in here, but this breakdown looks a little different to me. This big green candle and then a rejection at the 20 on a long-term chart, and then you've had 3 weeks of red and break the 50. It just doesn't feel good, unless you want it to fall, obviously. So what I think it'll want is this level down here. So what will happen first, let's blow this up. If this retracement continues and price doesn't find anything to sit on, it will take out the previous wave's low. That's typically what we'll do, right? Take out that low. If it doesn't hold, then you look to the 200. And it's, for people to say on a weekly chart, well, I don't think price is going to come back to, it doesn't matter if it's this or anything else. Oh, I don't think it's going to come back to the 200. That's crazy. That's the craziest thing I've ever heard. All right, price comes back to these levels, and price will find the 200. Price and time will come together. Nothing goes straight up forever. And I do think that if this continues to fade, you can start to look down here, fail that, and you start looking back in this range. And is all you're doing is you're connecting past price. And I think that's where we find a home. Now, we did have a request for Solana, so let's take a look at Solana. Where is it? There we go, right in front of me. Okay, so this is a weekly. Little cheat on her, but too quickly. Let's bring the volume profile up, and I'm going to add some longer term averages because everything is fractal, right? And when we drop our time frames, so this is 500 days, the pink. What won't show on this chart yet is the amber 1000. But again, everything is fractal. That's why we use them, because when we drop the time frames down, it'll make sense. Look at in here. It's nice to know what your support and resistance is, because then you can plan of how you're going to trade, right? You don't think this 500 days of price history is relevant? Look here. Right, this looks no different than the chart of oil that we've shown, where it was hitting its head on 1,000 days of price history. This is very similar. Right? So it means something. Like when you break the 200-day, it's meaningful. Right? That's our basic bull-bear indicator, the 200-day. And when you try and test it and then fail and break one level, find the next. How many times do we have to say it, right? When you do that, it also sends you a message. And you can see that price is struggling with breaking through this level. And on the weekly, so, one might say it's kind of hit this level in here and just started to fade. What you would be hoping for is that it would test this level, but it doesn't look like it's doing it. Now, what do we know when you have short-term averages crossing down through longer-term averages on any time frame? It's more bearishness, right? So we have to live with that too. We have to understand that. Let's take a quick look at where this volume profile is. It's not showing it on the weekly. So even though you've had 4 weeks of upward trading, do you notice that those 4 weeks haven't pulled that shorter term average up through the T line to trigger a buy signal? Do you notice how these 4 candles, so there's your first candle, second candle, third candle, they're shorter in stature each and every time. Notice how this candle, this week's candle, has yet to take out the wick of the previous candle. And how many times have we shown this before, right? Price wants to challenge, and then it starts to roll, does the old arch, and then takes out that previous wave's low. Right? We've seen that time and time and time again. And this is why I kind of wrote this script, so I don't make the same mistake over and over again, trying to cheat, right? Or going long and having a good trade and then adding to it at the wrong time. And then watch that happen. You ever seen somebody say, oh, as soon as I buy, price goes down? Well, they may have bought under one of these scenarios where price had gone up, they start feeling confident, but the trend really hasn't changed and price falls. Right? And that happens on every time frame. That's the daily chart. Let's back it up to a 12-hour, because some people might say the 12-hour is the true 24-hour in crypto because it trades all the time. And here's our 1,000-day moving average on the 12-hour, which is showing you resistance. Are you in a bullish trend? Absolutely. Right? You get a nice and obvious massive green candle here that triggers a buy signal. And then look, divergence, 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 stays intact, hasn't broken, and you'd still be in the trade. This is why I prepared this script. It wasn't for you guys, it was actually for me to do a couple things. Reduce the amount of thinking that I do on any given day on a chart, and to kind of take the stress out of my trading. Right? All of the candles that you're forced to stare at can cause you real grief when you're trying to figure out what to do. So is all I do is now I told you this before, I flick these candles off all the time, just so that I can understand, all right, these big green and red candles is all they are is volatility in what looks like a further uptrend. Right? And then you manage it accordingly. So here's a nice 4-hour. So what do you see here? We like this, right? When we have major moving averages that come together. So here we have the 20 and the 50. Right in here. And when we look at our other indicators, let's look at our MACD for a sec. Right at the 0% level, it starts to kick up a little bit. Now, was it running really hot? Yes. Do more bullish things happen when you find the moving average and signal line above 0? Yeah. Did it have to give away a lot? Probably in this move? Yeah. But to find it kick up down here is actually kind of bullish, to be honest. And here you are sitting on a shelf, right? So it's the slippery slope. If you catch a bid, you're going to want to take this out, and if you're that, if it's that bullish, it'll try and take that out. But if it fails, what's the risk on the chart? The risk on the chart is falling into this gap and coming back to, in all likelihood, the upper value range. You don't hold it, you come back to this larger shelf where the point of control is. Right, and again, this is Solana. My guess is it'll, if it doesn't pop here, it'll want to come back here. That's a big bench. There's a lot of price there. That's what that tells us. What you see and why I'm dropping my time frame down is because I want to see how choppy this actually is. Right? So on our 1 hour, we've already, look how we've respected the point of control on the 1 hour, right? So this is why I really encourage you guys to use it, because it will give you not just a range, but it'll also give you some targets. You get support, like that's to the penny. Tag the POC. This level breaks through the POC, but look, what does it tag? It tags the upper value range with a wick and then retreats. So this is what I mean about helping you find ranges, and this would be true on any time frame, right? 4 hour, 1 hour, 15 minute, doesn't matter. Yeah, that's what that is, Mickey. That's chop. You're right. So here we are, kind of in the in the middle right now. We're just waiting for something to happen. When you see your Fisher just kind of trending down in the center like this, it's telling you that it's consolidating and it's undecided. The Fisher's really great at telling you trend moves that you can tap into. So price breaks out, you take out this high, and then you'll probably shoot for the other upper value range, right? Again. Fail, take out the previous wave's low, or here, and then you revisit that level. And it's just, again, there's no need to front run the chart, right? No need to front run the chart. You just have to follow. And that requires us being patient. And that's the hard part. If I drop this time frame down a little bit more, because this is where we're going to see, where do we see these moves take place? They're going to show up on the smaller time frames first. Notice again on, this is 15-minute, you get more support from that 1,000-day MA. This is just 1,000 on the 15. But what does it do? It helps create ranges, right? Up there, up here, and it just helps box in, like we talk about tracking, trapping price. Well, that's what we've done here. We've trapped it within a range, and then you trade the range using, keeping in mind, this is ground zero, the POC, and everything up and down there is super tradable. So here on the 15-minute on Solana, this just happens to be good timing. We'll get an opportunity to see what happens, right? You break out here. Maybe you want to take out that high. But it's always, it's amazing to see how price respects those levels. And it's not just on the, the one asset that you trade, it's on everything. It happens over and over and over again. Crypto, commodities, stocks. And that's what's fascinating about it. And that's why I believe that technical analysis is the language of the market. It's a language. It's a mathematical derivative. And it's communicating with us, telling us what it's going to do. The question becomes, do we have the ability to interpret what it's trying to tell us? Not always do we listen, or not always do we have that ability. This is a chart of oil that we've shown before. And I'm just showing you the relevance of 1,000 days of price history. Back here, and this was the, when oil went to like $20 and then started to recover, it bounced along this level at $52 forever and a day, it seemed, at the time. And what it was hitting its head on is 1,000 days of price action. It's 1,000 days of buyers and sellers shaking hands, right? And when it took off from that level, when it finally just said, hey, you know what, I feel good enough to do it, price took off. Like, that's when you went up to $120, $130 a barrel, right? Big retracement, and then you came back down to 120, and then it dropped. But when it dropped, where did it drop to? 500 days. Where did it find resistance? 500 days, 500 days, 500 days. A little bit of a breakout, but ultimately your resistance is 500 days. Look at the support you got, though, off 1,000 days. And we always talked about when you break like long-term price history, it's telling you a lot. I'm giving away my my oil predictions here. So, here's that same chart, but on a weekly. Support, support, support. Uh-oh. Right? This is, you're trading here for a couple months under 1,000. You can't break it. And then as soon as you do, you just get rebuffed by the trend. But look what happens when you fail these levels. Like you've seen these charts before. 61, 66 was always the target. Sounded crazy when I set it up here, but in the event of a breakdown, and with knowing that current price visits past, it wasn't that hard to track, right? Because when you start adding in, when you start breaking levels, I'll take off these longer ones for a moment. When you start breaking levels, right, you break the 20 up here. Oh, sure, never mind. You break the 20 here, you find the 50. You get a nice bounce. That's the first attempt bounces hard, right? You get support from the 20, but you break it, you find the 50, then it becomes resistance. Same with the 20 in here. It's just a process. Failing one level, finding the next. Nobody wants to acknowledge that the next level might be farther down than you're comfortable with. I get that. But it's not our job to have an opinion on the whys or the hows or anything like that. Our job is to monetize the chart. That's our only job. That's it. Now, are there tradable moments in and out of trends? Sure. Is it more profitable? Probably shorts in this situation. Short? Yeah, absolutely. Right? Absolutely. But can you make money on longs? Sure. Right? You sure can. But the trend is down. Like, I'm sorry, this is, you fail the 20, you fail the 50, look what happens to the divergence. You fail the 20, you test, fail, divergence stays intact. Oh, you get a couple green candles, everyone's excited, oil's back, 64 bucks. No, it's not. Until this changes, oil's going nowhere. Like, we've shown this on every chart we've looked at, on every time frame we've looked at them on. This is why we use multiple time frames. So that we can be sure that we're still in a good trend, right? And this is still a good downtrend if you're short. And what's this candle doing? So here's the arc up, fails the T line, and rolls over, and it's taken out this previous wave's low, in all likelihood taking out this. But where does it go next, right? So once you hit a target, what do? Well, you're either adding to your short here, or you've taken profits and you've left trailers, but you're not longing yet. So if I use the same rationale on this weekly chart to get here, when price was here, let's look back again. Let's keep looking back. Why is this level marked off at 51.68? This could be anything. This could be a crypto project. It could be Bitcoin. It doesn't matter. This level's here because I'm marking consistent levels of past price, right? I can go all the way back here into 2017. Is this going to be an exact number? No, because all I'm doing is I'm just trying to find those levels of past price to give myself an idea of where it might go if it continues to break down. And I just keep doing that. And if it breaks this level, then what's the next level down? Right? We just keep looking to the left in order to determine where price may go on the right side of the chart. Does this look to you like it's still in a downtrend? Does this start to look like it might want another level? Yes, it does. Why does it? I don't know. I don't care. And neither should you. It's not important. As a trader, it's unimportant. The only thing that's important is price on a chart. That's it. What someone says doesn't matter. Now, I was in a space the other day and I heard a very, very, very smart person talk about the oil business and where, what that means for price. And I personally respect that person because they know more about the oil business than I do, but they know less about how to read price on a chart. What's more important when you're playing with your money, or you're trading your money, or anybody's money? You better damn well know how to read price on a chart. Because if you don't, you are literally walking across a friggin' freeway with a blindfold on and no helmet. Good luck to you. You're gonna get killed. You will get killed. Price on a chart is all that matters. What the analyst says doesn't matter. What Michael Saylor says doesn't matter. What the president says doesn't matter. What I say doesn't matter. What does matter is this. Price on a chart. That is it. Let's look at B&B, because I always find this, and I think you guys do too, it trades differently. Right? This is a daily chart, and this daily really hasn't gone too far lately, and let's blow the, we're going to see why. And you can see us just kind of consolidating here. Now we've got some volatility, and you obviously have your sell signal. After a nice run up, nice signal, nice divergence, you don't have to think about what to do until all that stuff ends. Just stay in the trade, stay in the trade, put your feet up on the desk and count your money. There's no need to be freaking out. Short signal is still intact. And here you are today, where? Right at the 50. 20's above you on the weekly. That's 630? 629, something like that. I would anticipate this to kind of chatter through here for a bit. Maybe you'll test the 20 and fade it back. But this is where we have to be careful that price doesn't do this again, right? Arcs up, makes a run, hits some resistance, and then fades. And if it was to fade here on the weekly, and this is why I like to use the weekly chart, because it's a little more consistent with the waves and the trends and the, just the flows. You can easily see the structural part to this chart, right? In around here. Right? You don't want to break this level. Because if you do, it's a whole other story, and you're probably going to find yourself looking for this. But we can only work with what's in front of us, and right now, it's been somewhat of a bullish chart over the last few weeks. But it hasn't made a serious run at the 200 on the daily, and that would be a little bit concerning for me. Because you don't want it to run out of gas just when you need it the most. Excuse me, there's the lower value range POC. It should want that, right? It should want to test these levels. If it doesn't, it's a little on the weak side. And ETH. Similar, right? So the question becomes, do we get a nice green candle off the 50, or does it fade? Look at the stochastic RSI and everything. Like, they're running hot, which they can. But if it fades, it'll be looking to take out the previous wave's low. Does that make sense? If it pops, it'll want to take out this level up here, in here, and then probably this lower value range at a minimum and start working its way up. But it's just how price behaves. This is not bullish. What do you notice up here? You got two tops of essentially equal levels, right? excuse me, the quote-unquote double top as we call it. But it's not a double top until it breaks there, technically. But when it does, look what happens. Look where that takes place on the week. Is this the weekly? Yes. It takes place right at the 50 and right at the 20-day moving average. So that's a real big tell. So when you see a chart and you've got a red candle like this one that's split two major moving averages on a longer time frame with that kind of real telling divergence, you know there's something going on, right? We've seen this a million times, right? You get your signal, price falls, goes sideways to where? To test the T line again and or the 5 EMA. And we've talked about this before. These are your areas that if you were still bearish, that you could re-enter the trade. You move down, you go sideways, you tag those levels, down again. Right? So these are areas that you can re-enter short if you were so inclined. Right? The divergence is so important here. And that's where we are today. So if I was short off this weekly, let's just say I was fortunate enough to get short here, based on my own methodology, I would probably still be short here. Still be short there. Until I get a real idea of what price wants to do next. But this divergence is key. The market is telling you that it's still bearish during this wave. Right? So I don't think I'm going to be able to get Ben in. We're having some technical difficulties and I can't seem to overcome them. But we'll get him back at his next availability and hopefully have those little bugs worked out. So this is where we sit with the weekly. It's price on a chart that matters the most. It's not what we think, right? It's not what I think that matters. It's what price is telling me. And this is where we get into problems with our bias, right? That's the problem. Our bias can get in the way of what the chart's actually trying to tell us. Like, let's look at the US dollar. Oops. Some of these things don't like volume profiles, so we'll take it off. You know, I was bullish on the US dollar till I wasn't. And you can see when you're trading above the 20, the 50, the 200, like you were here, you have to start looking over your shoulder because sooner or later you're going to retrace, right? You're going to retrace. Break the 20, find the 50. First bounce, yep. First touch, yes, you bounce to where? Here. First touch, yep. This one's the second one, breaks a bit, and you can see it's just boom, falls. You know, when the Fisher gives way like this, it's usually a big move down, and it was. So if you were really short here and you wanted to stay short, what would you be doing? Whenever you kind of get in a daily and it looks like it might want to go higher, you're just check the weekly, right? Just make sure that it's not a breakout on the weekly that's happening. And what you're going to see is you were just fine. And this is the stress we can cause ourselves, right? We get into the shorter time frames and everything happens in double quick time, and you know, before you know it, you're all confused. Let the market come to you. Don't front run the chart. Pay the insurance and make the safe, profitable trade. no one's going to give you a ribbon because you caught the wick at the bottom or something like that, although it's really, really, really fun. But it's not how you make a living. Catch the top of a trend and the bottom of a trend. But you don't have to, like, don't worry about the pennies. Right? Do not worry about the pennies. But is the US dollar still in a downtrend? Absolutely. Right? Giving more predictions away here. So this is what I think the US dollar wants, DXY. Right? 96. That's crazy. Right? I shouldn't be saying that out loud. It makes me uncomfortable. But what's the chart say? The chart said, do what you're told, right? Short the dollar. The divergence, you get divergence right away, which is the market's way of telling you you're in a downtrend. We've seen this before, right? We see this big green candle that's supposed to scare you away, right? That green candle's supposed to scare you away, but what do we know? We know what that divergence tells us about that candle. And how many times do you see that, right? The trend down continues, and the top of that red candle is basically the close of the previous candle within a little bit. But we knew that because the trend was intact. Now, if you would have got stopped out on that candle, which is possible, right? Then when you see, that divergence is there, you're safe to re-enter, and then you don't give up what you otherwise would have, right? But you can see again, where does price come back to? It comes back to the same levels that we talk about all the time. All the time. And the downtrend is still intact. It just is. It just is. Took out this low. Well, matter of fact, it took out here too. So what are we looking for? Level by level, probably somewhere in here. Like you see these 5 or 6 candles. That's a bench that it might want to sit on. Failing that, I think somewhere down here. Now there's a question on how do we set a trailing stop on Blowfin. I've got the BYDFi chart up here right now, and it's basically the same. So along this panel here, if you guys can see this, it'll say trailing stop, and it's the same on Blowfin, right? And when your trade's open, you just click the trailing stop, and you can set it by price level, or you can set it by a percentage. Typically, what I would do is if I'm in a trade and I get ahead, initially I want to have some sort of a stop in to protect myself. But, fingers crossed it goes my way early. I'll take the regular stop off once I'm in profit and put the trailer in if I think it's going to run. Then the only thing you have to figure out is where to do that, right? Because what you're trying to do is make sure that you catch, let's say you're short, you want to catch the down move, but you don't want any volatility to knock you out, right? And that does happen. So like on alts, so one of the things I think I've told you that I trade from time to time is this thing. Don't ask me why, but I just do. I just stumbled across it and I found it. And I wish I saw this earlier. But get a nice clean signal, right? And you're off to the races, right? So right now we're long, and you're gonna have a stop in hopefully when you open your trade, but as soon as you get into profit, that's when you can put that trailer in. And on something like this, now this is an alt, and I typically try and set it as a percentage. I might try 2% and see where it actually sets my stop, so that it's not, I don't want to get knocked out with any volatility, but I want to make sure that I can take make the trend work. So just as an example, if let's say I set my trailer here, I want to make sure that there's enough room that in the event of volatility, I don't get knocked out as long as the trend is safe, right? And that's something that it's a little bit of learn by doing, because when you're setting a trailer on an alt and setting a trailer on Bitcoin, it's going to feel like two different things. Just like the leverage does, right? It's like two different things. But this is a real good example of why I trade this thing. So it's because here you get a nice move and you just stay in the trade. Like, I don't know why people can't figure this out, right? Like, this is really easy stuff. And we've made it even easier, right? We're basically telling you that you can enter here and you don't see any kind of crazy drama that's going to change any of this trend. Even this stuff doesn't, until you get up here. If you were even leveraged just a little bit, that's a huge trade. A huge trade. But most of us, or most of the people maybe in here, on the shorter time frames, right? You're better off, let's say you were trading this with 10x, even 5x, and you got in at the signal, right? Somewhere down here. You got in at 10x and you rode it all the way up to the top. You would have made more money than trading with 30, 40x, but then getting knocked out of a stop all the time. Like, you don't have to use a lot of juice. You just have to be on the right time frame. Our job is what? To monetize the chart. That's our job. There's lots of different ways to get there. I would rather, drop my lev down, use a reasonable size buy-in, but drop the lev, get a signal this is the 4 hour. So what do we know? Well, this 4 hour chart is going to get you into a trade that's going to last several days. That's the hope, right? That's why we like the 1 and 4 hour time frames, because it can get you into those trades that run. This is an example of that. It would have been far more efficient to get into that trade. Like, if you're going to run a couple $100, it would have been far more efficient to run it at the lower amount of leverage and ride it higher than trying to jam yourself in and out of the trade all the time on a shorter time frame using higher leverage. Right? So keep that in the back of your mind. You think it's not as fun, you think it's not as challenging, but it is. These are the kind of things that prizes are awarded for. Because one day when you're trading, like, let's say this is early in your career now, but one day it won't be. Right? One day you're going to be using a larger lot, and you're going to be riding this thing up, and you're going, wow, I'm glad I learned that. And yeah, Real Spleefs is right? When you start pushing the leverage up, you can end up with less money. It sounds counterproductive, but that's the reality, and that's why the house wins quite a bit, right? Now, if we look at this chart, what do I want? Volume profile. If we look at this chart now, where's the opportunity on this chart? If this 4 hour rolls over, you're going to look for the 50, you're going to fall off the shelf, and potentially into this big volume gap where you find the 200 MA right on the shelf. Make sense? And how do we know if we can shorten our time frames? And you can see on this 1 hour, we're getting a little bit choppy in here, And we're struggling. This consolidation is at the point of control, which is a little interesting. Now, what we're doing here, this is just a series of checks and balances to make sure we're on the right side of the trade, right? The script's going to help you really get on the right side at the right time. But when you're in it, you have to manage it, right? That's the hard part. But if we look at this chart, so we obviously have the chop at the top, we're getting buy signals, sell signals, and that's an indicative sign of indecision, right? And the longer you kind of chop in an area, you have to be worried that you're going to break out or break down in a big way. And this looks to be a little on the light side. And price might be looking for what? The 50. Right? That's a logical target for you to use. Now, we know that it's in a volume gap. Maybe the 200 comes into play at some point, because you don't find the shelf, although it's meager, until here. And then ultimately, on the downside, there's the lower value range. But this is where you get to use your indicators. This is a real good example. So I'm just going to blow this up a little bit. And hopefully that you can see here this. So when I see stuff like this, that's not bullish, okay? That is not bullish. That's the adios signal. Look at your Fisher. Right. When this thing changes direction like this, pay attention. Right. In here you could do nothing but go long. In here you could do nothing but go short. Same within here. We'll obviously long in here. Be very open to using the Fisher because it's very good at telling you what trend is. And when we look at our MACD, we can see we're still above zero. There's a 1 hour time frame. We're still above the zero level. The red histograms we see are simply reflecting the downside price action. But if this moving average and signal lines, they keep trending down and they break that zero level, probably into more selling. What you're hoping for is that you find support at the 50 and or the 200. That's what you're hoping for. But just keep in mind, what do we know about this time frame? Well, we got a lot of support off the 50 until we didn't. And we've had support from the 200. Will we get it this time? We don't know. We're going to find out though. We have to find a way, like there's obviously things that we own that we really like, right? And we own that stuff, but it's the difference between the ownership and the trading. And if you're trading, you can't marry the asset that you're trading. I don't even know what this is. I'll be really honest. I don't know what it is. I think it's a staking protocol, but I'm not quite sure. I just know that I like to trade it. And when I look at the daily, which, you guys I'm sure you're doing as well, why do I short it more than I long it? Oh, I don't know. You tell me. Because it's the path of least resistance. Price is lazy. It'll take the path of least resistance, and right now that path of least resistance appears to be down. So I'm going to take more shorts than longs. And this rationale doesn't necessarily change for anything that we trade, right? Here's one that everybody loves to talk about. Everybody who's waiting to short someday is layer. But right now, I can't fight this chart. It just wants to go up. And any shorts that you're going to get in this are going to be short-lived. Literally, no pun intended. The divergence between the T line and the other level is pretty clear. And as long as it's there, it's telling you you're in a bull trend. You can start dialing back your time frames to try and see if, maybe you're at a top, but it would have looked like it's at a top a few times. And although it softens at some levels, is this a top yet? I don't know. Right? This is the 1 hour, which is kind of the chart, the 15-minute and the 1 hour on this particular thing of what I've been watching. If on this 15-minute, so you obviously have a sell signal. Now you don't know when you see it what comes next. Like, we have no way of knowing what the next candle is, right? We can only kind of prepare ourselves. But if you were to take this short, you're hoping it breaks the 20, which it did. You can start to see a little bit of the divergence that we look for in the T line and that other level of the 5 EMA to start to take shape. Now that you've broken the 20, the 50 comes into play. And we know that this thin red line is the upper value range. Or sorry, the thin red line is the POC rather, on the volume profile. So, this is in the neighborhood where I would have wanted to take a short. I have no idea if price is topping out at this level, but can you take a trade as you're hoping for a larger breakdown? Sure. But let's just kind of reboot this. This thing has gone nowhere but up. So if you're going to try and short it with a tight stop, because this kind of stuff will eat you up otherwise. I had a couple good shorts, and then you don't trade it for several days or something, right? But just, you don't have to bang your head against the wall, right? Just do what the chart tells you. The 15-minute is giving us an indication that maybe it wants to soften. We've broken the 20, probably wants the 50 in this point of control. If it breaks it, hey, we know what happens when you break that stuff. Look at this gap. That's all opportunity. And the 20's down here, and yes, although it's a million miles away, it's a target. Right? This is when we say to ourselves, oh, it'll never come back there again. Want to bet? Right? So it's just a matter of time. When it rolls over, it will roll over. Right? It just does. Right? Thanks, Ben. I'm so sorry about not being able to get you in here. The technology has obviously overwhelmed this old man, but we'll get you in next time, for sure. Make sure you check out Ben on Twitter too. And Ben is, he's got some really, really cool scripts too. His MACD ones are particularly good. So make sure you give Ben a follow, because he's deserving of that. So we will get him in when he comes back next. Let's look at a few stocks though, just because we have to, with everything going on. So this is Apple. I don't think Apple holders were expecting any of what they've seen over the last little while, right? Like, this has been pretty crazy stuff, and there's so many things driving this market outside of what we would hope drive market, right? It's a lot of narrative, it's the tariff thing, it's this, it's that. But ultimately, the chart told us to short. What we do when we're told these things, what we do with the information is up to us. But we have to make a decision. But when the chart tells me to short, I take it seriously, just like I do when it tells me to long. I wouldn't have longed here because I love Apple. I would have longed here because the chart told me you can make some money. I wouldn't have shorted here because I hate Apple. I would have shorted here because the chart said you can make some money. That's it. It's not a love-hate thing. It's nothing like that. I don't care where price goes. I'm absolutely indifferent. what this script does is it keeps you out of, or it keeps me out of trouble. So when price breaks down, and you come back, well, you can't break the 50, and you kind of tag the 5 and or the T line, and it fades. Same with this next big candle, right? Where do you find support? Right at the 200. Where do you find resistance? Right at the T line. So again, although we've had massive, massive volatility, the things that we use to track price don't change. Tools stay the same. They just tell us in maybe a more flamboyant way that we're in a bit of a mess. And yeah, like Real Spleefs is right, chop suey is what the Apple chart is right now. And you're 100% right. And how do we try and take a little bit of that noise out? Well, we change our time frames, right? Not because we're trying to see something that we want to see, we're trying to see what the market is telling us, right? Because again, this is a language. This is the language of the market. Price behaves a certain way, which is all part of this language. We finally get a sell signal on Apple on the monthly. Where did price come to? Basically the 20. Where did it retrace to? The T line. And what happened when it hit it? It faded. What did it fade to? The 50. What does this wick mean? Or what do you believe this wick could mean? How about, I'll see you again someday? How about that? Probably sooner than you think. When you see wicks like this, they're not going to get left there. Price will come back and want to tag that level. Remember, on this monthly chart, if you're looking at Apple, everything over 136 is above the upper value range, which is a wee bit of a premium. That's just my 2 cents. So what does price, who wants to, raise your hand if you want to pay too much? Anyone? Nobody? Well, then don't buy up here because you'd be paying too much. I don't know how to break it to you. Okay, that's what would be happening. And where does price want to come back to on the weekly? Anybody? So this bounce, tag the 200, you get another bounce off the upper value range. Are we still paying too much on the weekly? Yes. You're still paying a premium on the weekly. So you're paying a premium on the monthly and a premium on the weekly. Who wants to be the one to pay the premium? Not me. Do you think maybe the 50 becomes relevant here? Sure it does. We're going to see a lot of charts like that right now. Should it want the 200? Should it want the point of control on the daily? It should, but I don't think it's going to get it. I think you're going to see this. Down, retracement, fail at the 20, down. You get this retracement, I think it fails at the 50, and then you start doing what we know. Roll over, take out the previous wave's low. Right? This is a roller coaster of emotions, if you let it. Right? Up, down, up, down, up, down. And then the volatility that we're experiencing right now on top of all that makes it even worse. Right? It just does. But I think you're going to have a lot of fun when price gets back up here again and starts looking at all this stuff in here and back in here. You're going to break through? Is it going to be the first touch? Yep. First touches are always the most fun. Right? So pay attention to this on the daily when we get there. Time and price will come together at some point here. And when that happens, that's a real test. Why is the 50-day moving average a light blue color? Because it represents ice. You fall through the ice. My trainer would say that's an ice hole failure. And it's a real pain in the ass to get above the ice once you fall through it. You do not want to fall through the ice. And there's a reason why the ice, the 50, is very relevant, right? If you can't break the 50, you're not going anywhere. In order to to take that 200 out, in most cases you got to break the 50. And if the 50 and the 200 are above you, you're already in a bearish trend, right? So you really got to get above the 50, and you really got to get above the 200, and then you really want to stay there. But it doesn't always happen the way we want it to. So let's look at NVIDIA. It's going to be a similar looking chart. Also noisy, also kind of chop suey-ish. That's Spleef's word, not mine, but it makes sense. Right? Does it not look very similar to Apple? Right? You had a very clear sell signal. The divergence between these two levels is what's important, not the candles, in my opinion. Is price action important? Of course it is. But once you're in the trade, right? So look how toppy you were up here. You're flat. You get a sell signal. Yeah, you're going to take that. And all these candles in here were really crazy. The only thing that I'm watching is this divergence. It gets broken, that's a whole other story. But when it doesn't, the market was telling you what it's going to do. We don't have to think about it. The only thing we have to think about is how to train ourselves not to think about it. The sooner we do that, the better off we're going to be. This NVIDIA is a slippery slope. There's your upper value range on the weekly, which means all of this is a premium. You got these big gappy areas in here, which is just, there's a massive sucking sound when you fall into these gaps, right? Because it happens fast. How did they get created? How did these gaps get created? This kind of parabolic trading with absolutely no retracement, price go up only, and this here. That's what caused those big gaps. Because all of this stuff in here, you see this big gap is? That's just blown with fairy dust and air. And when the price comes back to test it, fairy dust and air doesn't hold up very well. That's what causes the gap. And that's what causes the shelf. A consistent level of buyers and sellers shaking hands. This is not that. What else can we look at for you guys today? It's probably about the time. Actually, I have an announcement. So what I want you guys to do, this is kind of exciting for us. So BYDFi Exchange has agreed to sponsor our FEG streams. They also obviously list FEG, which makes sense. They have offered up some trading bonuses for each stream that we do. And I am going to offer up an hour of my time for a one-on-one session for the people or the winners that we select. And here's how we do it. You open up a BYDFi account under my link, and you'll find that link if you're watching from YouTube. You'll in somewhere in my description there is the link to BYDFi. If you're watching on X, it is also in my profile, and you register with that link, and you're going to be given a user ID number, just like you would on any other exchange. And then you will submit your user ID number, and we can do that to, you can send them like directly, and then I pick one, actually two, for the trading bonuses at random, and I will pick also a winner of the training session as well. So that's kind of what we're going to be doing over the next little while. So if you haven't gotten yourself a BYDFi account, it's a no KYC sign up. So basically an email gets you there. It's not very difficult. And you simply sign up with your email, and there is also to kind of launch this, a deposit and a deposit bonus program going on, and I think when you click the link you'll see it on their site as well. So I'm going to give who's ever watching here a few minutes so that you guys can, you know, get signed up. And as you do, what I think I'll do is you can send me, let's see, King, if you have an idea here, let me know. But I think what we could do is you could randomly send your user ID, your BYDFi user ID to, you can send it to me on Twitter even, on X. And then from there, I'll select the 2 trading bonuses and the training time. So I'll give you guys a little bit of time to do that, and we'll continue on. Do we have any symbols that you want me to look at? Because I know every week someone's got something that I've never heard of before. So I'm trying to figure out what it's going to be this week. It was layer for a while. And then there was it Mubarak? That's what it was. That was one of the other ones. Did we look at the daily the last time we looked at this thing? So FLR, you got it. Yeah, this is Mubarak. This thing is not feeling very well at the moment. Had a little bit of an attempt to break out. Couldn't really get past this level here, and then faded. Now, is that a nice trade? Yeah, sure. Right? This is what I want you guys to understand too. Even though something's gone straight up or straight down, there are trades in there as well. Like, you have to recognize that. You know, if you're not on the main trend, there's still stuff to trade. Whether it's the same asset or not, there's always something to trade. But just another good example of do what you're told. What do you guys see here? You see a doji at the end of a bull trend, and your short-term averages point out and could poke you in the eye. That's an exit signal. You're going to see these things on all of your charts eventually. You'll see a nice bull run, and then you'll see this flaky doji and those 2 averages pointing out, and that's usually an exit signal, which it turned out to be. FLR. Flare, is that right? Flare US dollar. Okay, so what do we see? So here's the big point at the bottom. So you'd see that big point there. That's usually, again, a change in direction. You roll in the next day with a confirmed buy signal. So did you notice here, even on this retracement, it wasn't enough to pull the shorter term averages down through the T line to break the trend, right? Just couldn't do it, and this divergence is still intact. It's another good example of turning off the candles so that you can just see without any of the drama where price is going. Even here you can see there's obviously a pullback, but it didn't break trend in any way at all. And you basically come close to wicking the 200 on the daily, which, look at this level here. See, this is past price. current price looking for past price. That's how we create targets, right? We're looking for past price. We're looking to create ranges that we can trade in and out of. And we do it over and over and over again. But this thing is still, even though we're getting a little bit wicky at a certain level, it's still showing us that it's bullish. At least on the daily, like your stochastic RSI has diverged upwards. Fisher has. MACD, you have a moving average and signal line above 0. So all of those things are bullish, right? So, and they stay that way until they're not. And how do we check to see if things may roll over? We just simply drop our time frames down. This must not get a tremendous amount of volume. Right, so here's the daily. So you can see on the daily, you're struggling with the 200-day MA. Okay, what else do we have? What are the other things that scale? This is another alt that I trade from time to time. Just because it moves relatively smoothly. That's a wee bit choppy, but these are the kind of moves that I like. And then there's another one, oh, there. Alt is another one. Same thing, right? Sell signals. Look at this trend down. At no time in here, told what to do, whether you did it or not, right? And there you are. Another nice move. You can make money in a downtrend, in a downtrending market. Just don't use too much leverage to do it, right? Like that'll be the trick. Just don't use too much leverage to do it. On anything, for that matter. You don't need to use a ton. You want to get on the right side of it on the right time frame, just like we showed before on the 4-hour ETHFi, where you would have been in that trade for several days with very little to no risk of liquidation, and if your stop was done right, you wouldn't have any issues with the safety of the trade. Who else has got something else we want to look at? Because I know they're there. Let's look at Tesla. Now everyone loves Tesla for different reasons or hates it for different reasons. But on the daily, you're given a sell signal back here right at the 20 that you were failing. A little bit of support from the 50, but the downtrend was intact. Fails, and the thing just melts. How do you make sure you're still on the right side of it? Flip to the weekly. As long as that divergence is there, it's okay to stay in the trade. This big candle probably would have scared a lot of people. That's fine. It's okay to take profits, right? You may have taken them down here at the 200 because you would have been afraid of a bounce or something. Right? We'll get you in the trade at the right time. When you get yourself out is sometimes up to you, and that's why you've got to learn to set targets. Like when you get in the trade, you want to know where you might want to get out of the trade, so that you can you can't make any money if you don't take your profits. Like it's one thing to look at your P&L and go, wow, that's awesome. And then to come back an hour later and have it all be gone. Right? Like nobody wants that. So just take your profits regularly. and frequently. Let's look at got another crypto project they want to look at. So an update on Bitcoin quickly. Still hoping to find the POC on this thing, right there. And still bullish. Do you want to buy here? I don't know. I don't know about that. But as a trader, you look at it and you go, okay, I know where I'd want to take profit at. I think if we do anything, we want more people to take profit more frequently, because the volatility in the crypto space right now, and I've even experienced it, is so great that it'll eat up any of your profits that you struggle to make. Right? You work hard to make money in it. You may as well keep as much of it as you can. So please, 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 when you have the opportunity, take your profits. When I see stuff that's 30, 40% and more, I'm starting to take profits at it. They don't all run to triple digits or anything like that. I'm very happy taking 30, 40 points off all the time, and so should you guys, right? This is later again, and it just wants to go up. It just wants to go up. So, who's got some questions? Anybody got any questions at all? Usually we do. Anyone? Anyone? Write it in the chat. Where do you think gold wants to go? That's the $64,000 question. I think we talked last week that it wanted 35, and there it is, 35. And then it kind of faded from there. Let's take this off. And that's a monthly. But look how far price is away from the 20-day moving average. That's a long way. And price doesn't like to be too far away from the 20-day. It'll at least want to come back and kiss it. So at some point, time and price will come together, and it'll find the 20-day. But in the meantime, this gold just wants to keep running. And I honestly don't know where the top is for it. So US dollar we looked at, oil we looked at, Bitcoin we looked at, Sol we looked at, XRP. Let's look at XRP. So I have no reasonable explanation for why price does what it does. Right? That's kind of not it's not my strength. I have no idea why things do what they do. I'm just, training myself to follow the chart, do what I'm told, and to not think about the reasons why. Now, back here on the left-hand side of this chart, there was nothing but consolidation for a very, very, very long time. Right? This thing didn't really go anywhere. But eventually, it breaks out of consolidation. You don't know, is this red signal be the one that takes it to zero? Is this green signal going to be the one that takes it to $5? You don't know, right? You just have to do what you're told, be at the right place at the right time, and then manage the trade to the best of your ability. But if you were in at the right time, down here at 50 some odd cents, this thing went parabolic, right? Traded upwards of 330, 340. But the point is that you take this trade and then all of a sudden it starts to run. You have to be in the right place at the right time, right? So using this, the script does that for me. One of the other things I do is simply set alerts on my charts, right? Right click, add an alert. There's different types of alerts that you can use, like you can set the conditions are all different. But I'm saying when price crosses through, like 5 EMA or whatever, I believe it's in here. There it is. You can set it for however long you want to set it for weeks, for months. You can set it to go off at 1 bar or 12 times, it doesn't really matter. But this is just another way to get you in the right place at the right time. And quite often I'll set alerts on, the 1 hour or the 15-minute. And in a perfect world, what your attention is being drawn to are moves like this, right? But we don't know. If you're if it's sideways trading, probably not going to want to take those. However, the ones off the 50 or the ones off of major moving averages like you see down here, the 50 and the 20, yeah, you might want to take those. Here's another one off the 50 down here. This is why we do this. It's just a process. We want to get you on the right side of the trade early enough that you can monetize it to its fullest. Now that I've got all this some of this technology sorted out, I'm going to do a video to put on YouTube about how to trade the script. One of the things you'll notice is that I don't have the vertical bands on. Right? I took them off. I was just trying some different stuff. Just tried running without them. The script is the same, but we'll go through all of those kind of things when I do the video. But we're simply trying to get you in the right place at the right time, so that you can monetize the chart with as little stress as possible. That's all I want to try and do. Focus on the chart. It's the language of the market. The chart will tell us when we're bullish and when we're bearish. All we have to do is listen and pay the insurance to make a safe, profitable trade. And what I mean by that is you're not always going to catch the total top and the total bottom. Right? All we want to do is get in at the right time. So if we entered here, are we late? No. What we are is we're in at a time when we can be comfortable that the market is going to trend in the direction that we want it to trend in. That's what we're really trying to do. Just because you didn't enter here doesn't mean that you missed your opportunity. Doesn't mean that at all. This is just the insurance that you pay by waiting to make the safe, profitable trade and not a mistake. Now, why would this kind of line up to be a nice short? Anyone? Couple things. You don't want to long into resistance. Don't want to make that a habit. So you don't want to be longing into the 50-day unless you're super, 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 super certain that you're going in the direction that you want. And when you look at your stochastic RSI and your Fisher, you are really overbought, right? So more inclined to see a pullback there than anything else. fail. So you don't want to long into resistance like that, because typically they can fail. And you can see how many times it has. So just be careful. And again, this is on any time frame. It doesn't matter what the time frame is. It could be a 5-minute chart. This trend up is bullish until it isn't. There's no shame or anything for, for closing the trade. It doesn't mean that you lost confidence or faith in the trade, and it doesn't mean that you were wrong. It just means that you're taking your profit. There's no reason to try and hold it to take out the top of these candles, because you just have to know that you're going to be retraced. Right? So one of the things I notice when I'm working with people one-on-one and they're trading shorter time frames, they have a tendency to set targets that are too high. And what happens is that the target is so high that it actually, price pulls back and retraces, and the trade gets closed long before it ever takes a run at the target. It probably, it will hit a closer target first. You can't, and you have to understand that it's going to react when it gets there. You can't ignore the targets in between yours. Price isn't just going to blow through everything else and hit your target that you want to hit. The market doesn't care about you, or where you set your target, or where you set your stop, or what you believe price should be doing. The market doesn't care. You just have to look after you, and we just try and give you the tools to do that. That's really what we want to do. Give you as many tools as possible to make safe, profitable trades. I hate to use oil as an example, but I can't help it. There are too many people that want oil to go up. There just are. They're everywhere. The oil bulls are everywhere. And they don't change their position. They were just as bullish, they're just as bullish down here as they were up here. Many of them. The price on the chart is all that matters. You can be bullish all you want. I would prefer it if you were indifferent. Indifferent to bullishness, indifferent to bearishness, and full on price on the chart. Indifference to sailor, indifference to analysts, indifference to anything that comes out of government. Price on the chart is all that matters. That is it. As soon as you start listening to all that other stuff, it messes with your ability to analyze what you've got on the go. Is a macro narrative important to understand? Yeah. But don't spend all your time in the weeds about is the Fed going to up interest rates by 1/4 point and when, and what's that going to mean to the dollar, and blah, blah, blah. Who gives a crap? Price on the chart will tell you everything that you need to know. Understand what happens in the event of a breakdown when you break one level and you find the next, and you start making lower highs every single freaking time. What does that tell you? It's the oil analyst who doesn't know how to read price on a chart. Oh, demand is low, price is going to go up. Oh, demand is lower, price is going to go up. Oh, the Saudis this, price is going to go up. Who gives a shit? At the end of the day, you're making lower freaking highs. What don't you get? What don't you understand? If you're making lower highs, you're not bullish. Do you think the market cared about inventories? Did it care about tanker capacity? I don't know. I don't care. It doesn't matter. If you make lower highs, you're bearish. Price is going down. You start breaking levels, you're looking for the next ones to the downside. Until a shit ton of money comes in to change the direction of price, that's what's happening. Deal with it. Same with this. SPX weekly. Price isn't going to go up forever. You think this is normal? It's not normal. It's not normal. There is a tremendous amount of downside risk on these charts. If there was a volume profile on, that's what you would see in here. Upper value range, point of control, lower value range. This is a monthly chart. This is not normal for price to go up like this forever and ever and ever and ever. So don't be surprised when you look at these long-term charts, right, and you see these ranges way down here. Yeah, price will want to touch the 50. It'll want to find that wick and it'll want to find the 50. It's not going to go tearing up forever and ever and ever. They may have to come in and support the market at some point in time, but when stocks are doing this, so we had our big pullback, but if you're telling me there's a case to drop rates, why? I don't know, market looks fine to me. Doesn't look like the end of the world anymore. Will it want that to happen? Will it want that to happen? They want the dollar down and they want rates down. And the only way to get that is for markets to go down. That's the trade-off. So we'll see where we go. But all we can deal with is the price on the chart. And right now it's bullish, and right now it looks like it wants to tag the 50. That's all we can do. Just deal with what's in front of us, whether we like it or not. You can only trade what's in front of you, whether it's crypto, whether it's, FEG token, it doesn't matter. You can only trade what's in front of you. FEG's had its moments too. We've all been there with it. Maybe we'll have our XRP moment, right, where you break out and you have that giant spike. XRP did this the longest time, and then boom, breaks out. It just takes time. And then there's stuff like this that one day will not go up all the time. And when this thing does fall, it'll fall hard. And it will probably look like this at the end of the day. Big move up and then straight down. We see that all the time. Big moves up and then down. And then we chew up lots of time as it consolidates. But you guys have a great opportunity right now, and I know that Ken from a couple weeks ago was trying to reiterate the same, is that if you can trade, you learn how to trade in this market, you can easily do this. This is not hard to do. You just have to follow the chart. Right? You don't want to try and make long trades in here. If I can teach you anything, it would be that. Don't make long trades in here. Right? Monetize the chart. That's your only job. Price is the only thing that's important. We don't have to front run it. We just wait to do what we're told. Oh, short? Okay, I'll short. How long do I stay short for? Until I tell you not to be short anymore. Okay, I can do that. Oh, you want me to go short again? Okay, I can do that. You don't want to do it off the daily? That's fine. Do it off a 1 hour or a 4 hour. Find a chart that has nice moves. Nice moves up, reasonable retracements, nice moves higher or short, doesn't matter. It doesn't matter. The chart is just a means to an end for the trader. It's not a relationship, right? You're not taking it to the prom. It's just a chart that you have an opportunity to make money from. That is it. It's as simple or as complicated as that. All of these things trade the same. They respect resistance. They respect support. Their first attempts have a higher probability of failure or support depending on the direction you're coming at it from. Rinse, repeat. Use the volume profile to find out where the light trading is so that you can plan trades in and out of those areas. Let's find something else to look at. Right. The volume profiles give you real opportunity. This is tau. Right? Nice clean buy signal right off the point of control. See the consolidation down here right at the point of control? Beautiful. Get a sell signal and this thing took off. You don't even see any sort of pullback until 371, and down here the buy was at like 232. Again, this is the 4-hour chart, right? This is the one that you want to trade if you want to be in something for hopefully several days or more. Consolidation, nice breakout, divergence in these levels. You just trade it up and trade it up and trade it up until the chart tells you not to trade it up anymore. Eventually, you're going to come back and tag the 20 and the 50 and so on with this big giant gap in here and the 200 sitting in the middle of it. So draw for price. That is a draw for price. So you guys, I'll give everybody a little bit more time to get themselves signed up, and then you can start sending those things anytime. But I can't do it if you don't sign up, so. So do we have any other questions? Anyone? Good. So here's what I need you to do. So in order to give away the hour training session, you have to just send me a message on Twitter, for example. Just say training, and that's all you need to say in it. I'll know. And we'll have a winner selected at random, and then that person and I can coordinate the hour. And then you can send me your user IDs for the next couple hours, because people are working and all that kind of stuff. So I'll give you a little bit of time to send the UIDs in. And we're going to give away two $50 trading bonuses. And the winners will find that they'll get deposited straight into their accounts by BYDFi. It might take a day or so, but that's how we do it. Okay? So any other questions? If not, we can close this one up until Thursday. I guess we're back next, so. All right, guys. I will see you on Thursday. Thanks for taking the time to register at BYDFi. They're a really good partner to have. They're going to continue to supply us with some pricing, and so will I. And I will see you again on